Hi, everyone. Today, let's talk about the PCE data. Then we'll go over the Fed futures. Then we'll go over the charts. Then we'll look at my results for the day and my positions going into Monday. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So looking at the results for PCE today, you can see month over month came in at 0.6%, year over year 0.47, both above expectations and above the previous iteration. Regular PCE also above expectations, and PCE year over year above expectations. So basically everything was much higher than expected, which is definitely not good for the markets. Personal spending did well though. Personal income started to go down, which is what you want to see in terms of inflation. But interestingly, Michigan's 5-year estimate on inflation is still at 2.9%, which is in line with expectations. Home sales did very well in January, so the economy is still moving along, as we can see with the PCE inflation. And consumer sentiment was actually up this month, which was again above expectations. Moving over to the Fed futures, I do want to highlight that it's slightly less likely that we get 25 basis points now, and a little bit more likely that we get 50 basis points. I still don't think that that's going to happen. I think we're going to get 25 as the majority of people expect, but we are pricing in a little bit more potential at 50 basis points. Similarly, on the next month, we have 25 basis points in the lead, assuming that we get 25 basis points in March. And you can see here a slightly higher expectation for 50 basis points in May. Again, I don't think that's going to happen, but you can see the market is moving in that direction slightly. And even a small percentage think we're going to get 75 in May. That would be huge. Obviously, that would tank the markets. Definitely not what we expected. But you can see now that nobody expects a pause here in May. Everybody expects at least 25 basis points, if not more. Moving to June, similarly, 25 basis points is the majority. Small possibility of 50 basis points, even smaller possibility of 75 at that point. And you can see there's still a few people holding out, thinking that we're going to get a pause in June. I don't think that's the case. I think we're going to get 25 3 times in a row here. And then finally, as we get to July here, you can see the majority do think we will get a pause in July. And then there's a scattering of other things here, potentially another 25 basis points in July. But once again, like I said, the majority thinks a pause is finally going to come in July. Of course, there's a ton of data between now and then, but do keep in mind that the current expectation is a pause in July. Moving over here to the charts, this is the S&P 500 on the daily chart. So just sticking with the daily chart here today, I want to look at this because you can see we're in this trend. You have a clear low, high, and slightly higher high here. It's noticeable that we did not get all the way up to the trend resistance. We did pause at this previous trend, which was the lows here from March, as well as the highs here from May. We got paused at that level, showing a little bit of weakness, which is interesting. But right now, we are at the trend. We are at the 200-day moving average. We also touched the 144 EMA here today. Lots of support in this zone. We're also getting very close to retesting the longer-term trend line. At this point, you have to assume that we're at least going to get a little bit of a bounce from here. Certainly could go a little bit lower, maybe retest these lows, come back down to 393, 392. Certainly could do that, absolutely. But this is a ton of very long-term support, and I would certainly expect that we're going to get a push back up at least to that 400 level, just because of all of the strength that we have down here. Lots of people are going to be watching the 200 SMA, and that is generally a zone where buyers are going to go long if they are going to recommit to the long side. Otherwise, it's a pretty big surprise to me that we got a huge down move after this pretty strong bullish hammer that we had into the close yesterday. Of course, the PCE data wrecked all of that, and then we moved down significantly after the data. But like I said, we found support in this zone like we were talking about, and I do think we're probably going to get a retest, probably up at maybe the 9-day moving average as these kind of drift towards each other back around that 400 level. Moving over to the Qs, this is a little bit busy, but it is very important here. You can see we had a lot of weird candles here on this down move, lots of bounces and lots of gaps lower. And you can see once again, we got a doji here at the end of the day holding this bottom trend line on the daily chart. We did touch the 200 SMA here just for a moment on the daily chart down at 290.20. Touched that level and got instant rejection, stayed above the trend line, but we are below these previous lows here. So you can see the zone of resistance that I was watching. Turns out this zone was also resistance on this bullish hammer. I wondered if we could get through it and maybe make some higher highs here. after this pretty decent consolidation that we had, but it didn't work out that way. We gapped down on the PCE data into this stronger zone of support. You can see we haven't tested the longer-term downtrend line here on the NASDAQ either, but we do have some decent levels right where we are at the 200 SMA. Either way, here you can see momentum on the daily chart is still stepping down. We're through the 50 level, but you have to start to respect these levels not that much lower than we are, maybe $2, $3 lower than we are now. But of course, looking at the MACD here, you can see last time we got across, we did get a fairly significant downturn. And this is really just the beginning stages of this downturn. Doesn't mean you can't get a bounce at some point within that cross like we did here, pushing up, getting a big retest, and then a continuation to the downside, which then moved into consolidation and a move higher. But right now, looking at the MACD, this says that we do have more downside, but probably going to get a bounce in this zone just because there is so many SMAs and EMAs in this area. Moving over to the Russell and the Dow on the 4-hour. Russell continuing to look quite strong through wicks to the downside, finished much stronger than I thought it was going to. Kind of expected to finish up around 168.50 or so, pretty much right at these previous lows. But we rallied really strongly into the close, and it looks like we're probably going to rally into Monday. Momentum basically flat on the 4-hour, still sitting pretty low on RSI, but these wicks and these hammers do look pretty strong going into Monday. The Dow, on the other hand, looking much weaker, continues to make new lows. Did get a doji here on the second candle of the day, but looking weak into the close. And I would expect this to get a continuation to the downside. You can see all the EMAs here are to the upside as well. Does not have that same downside support with the 144 EMA here or the 200 SMA like the Russell. So overall, Russell looking stronger, Dow looking a little bit weaker here at the end of the week. Moving over to Apple and Tesla. Apple hit that first zone of support that we've been talking about in that 145, 146 area. This is the previous high going back to the end of January. Touched 146 just for a moment and found support into the close. Still looks weak, still looks like a downtrend. We're not in an area of bigger support yet. Still looking at probably 142 as the next consolidation area if we do break this 146 level. And right now, that's probably going to happen just based on how weak this looks. It is slowly starting to curve up a little bit, and maybe we get a short-term retrace here on Apple. That would be good for markets, but right now, the biggest stock in the world looks a little bit weak. Moving over to Tesla, just can't get below that 193.50 level. Retested it here and bounced once again, holding above this level, still consolidating in this zone. Absolutely could break down at some point, and if it does, it's probably going to be pretty violent. It's worth noting that all the EMAs here are finally in line with the 921 and 55 EMAs here on the 4-hour. And then there's a lot of downside room before we hit the 144 and 200 SMA on Tesla. So slight downtrend, but support is still holding. If this does break down, that will be bad for the NASDAQ and probably for the rest of the stock market as well. Moving over to Google and Amazon. Google continuing to sell off at a rapid pace, finishing very weak here. Is oversold on the 4-hour chart, but all the EMAs are to the upside here on the 4-hour, and this does look quite weak. Moving over to Amazon, dojied into support, still holding support just slightly. Definitely could be an island reversal setup. That would be interesting. Or it could gap down from here, gap through this resistance, and then we have quite a bit of downside potential. The next consolidation zone would be around $88. That's where I would put that level right here at the previous wicks on 8 and 9 December. And the highs here on 3 January. So potential downside of a couple points. But if this is an island reversal and we come back up and maybe retest the 21, then you're looking at around $100 for upside. Probably going to be some resistance here at $96.50, but $100 would be nice here on Amazon. Moving over to transports, you can see here they actually found quite a bit of strength. Looking at the 4-hour chart, you can see a nice wick rejection here at support. Strong finish into the close. Looks quite bullish. Momentum moving in the bullish direction on the 4-hour chart. Daily chart momentum definitely looks weak, but still holding at the 55-day moving average and finished pretty strong considering the big gap down that we had. I think you could at least look for a gap closed on Monday. And if we do move up, that would be probably into this 233, 234 zone, which of course would indicate the rest of the markets are likely to go up on Monday as well. Moving over to consumer staples, definitely weakness here in staples, but did finish fairly strongly after the gap down. Just barely got to the previous day's lows, which is a little bit stronger than we saw in the rest of the markets. Moving over to discretionary, gap down and basically sideways in the day, so slightly stronger here on staples, but not much. Basically, both of them sold off and not giving us a lot of information right now. Moving over to semis, we actually do have a higher low here. So this is kind of a choppy chart. We had a low, gapped up really strongly with the NVIDIA and earnings, made a double top and then gapped down here today, but did kind of form a bottom here and then rally a little bit into the close. Certainly looks fairly bullish. Could move up into this 241, 242 zone. That would be interesting. Maybe we get a gap close. That would be really strong. And if that does happen, then you do have to look at this as a low and a slightly higher low here on semis, which would be quite strong. Momentum on the hourly chart, not showing very much. RSI, slightly weak here, rejecting off of the 50 level. 4-hour chart, looks like 2 dojis in a row, sitting on that 9 EMA. Not giving a ton of information here, but if we can get above this previous trend line, then we can look towards that gap close, which would be about $4 of upside, which would be pretty strong on a Monday. Moving over to the 2-year and the 10-year yield, the 2-year broke out and moved much higher, which was kind of interesting considering how slow it was moving, and it looks like it was losing momentum. And then the PCE data came out and we pushed above 4.8, which was very strong on the day. So yields going higher, did get overbought conditions here on the 4-hour chart. Looking at the 10-year yield, though, you can see kind of stuck in this holding pattern. Can't seem to hold above this previous high. I do think that's because we're still looking at basically the same 3 rate hikes like we talked about on the Fed futures. 10-year yield not reacting nearly as strongly as the 2-year yield. Makes sense that the 2-year is probably expecting to hold rates higher for longer, but the 10-year is still expecting that we're going to get some cuts long before we get to 10 years from now. Moving over to the dollar here, very interesting chart. You can see we pushed up super high with that PCE report and basically held in that pattern for the next 3 candles. Daily chart looks very strong, big green candle here. You have to note it looks a little bit extended. We're almost overbought here on the daily chart, definitely overbought here on the 4-hour. So certainly a spot where you could see some reversal. I'll be interested to see how this holds after hours here today. If it's going to continue to go sideways, then maybe we get a candle break continuation. That would be very interesting. But even if it did so, it's not going to have a ton of upside. We're also at this previous high resistance and this previous consolidation area back from 5 December. So definitely some resistance here, definitely extended. And if we do get a little bit of rejection here on the dollar, that should be bullish for stocks on Monday. And that seems to be the thesis going forward. Moving over to JNK here on the hour and the 4-hour. Surprisingly strong considering the news. So we did gap down just as you would expect. But then we kind of rallied throughout the session, which is definitely not what equities did. Equities definitely moved lower and struggled throughout the session. JNK looked fairly strong, indicating, like I said before, it seems like we're going to find some support at the previous trend lines. And hopefully we get a little bit of a rally into Monday, maybe even Tuesday. Moving over to the VIX to finish up the charts here, you can see we did move higher on the PCE data, right into that resistance zone, right into the resistance lines that we were looking at. And then we got a big wick to the downside here on the daily chart. That looks pretty bearish to me. So we did bounce off the trend line like we talked about, back into the resistance zone. And then we had a big red candle on the 4-hour. Once again, testing support here, certainly could get another bounce and a push higher. Definitely something to watch for. But at this point, you do have to look at this as a potentially lower high here, and we have a low. And if this does break down and we make a lower low somewhere in this 20 zone, that would be interesting. And maybe we start to see a slow slope down on the VIX. Like I said, certainly could bounce from here, but you do have to respect this daily close. Does look a strong wick rejection and a potential to move back down at least a point or a point and a half or so. Moving over to my results, not great. I was a little bit bullish going into the day, which obviously struggled with the IWM moving down about 1%. SPY was down about 1.5%. NASDAQ was down almost 2% on the day. So that was going to be a little bit tough to handle here. But you can see I did end up getting into a covered call position for Monday, which is showing a little bit of a loss right now, but that's not actually true considering that I do have these 200 shares here. If the market moves higher, obviously these losses are not going to come to fruition. I'm looking to gain about $120 on each of these positions going forward, so that'll be good if we do get a little bit of a rally on Monday. Similarly here on the IWM, I do expect to get assigned on these 188 puts, which is basically right where we finished. So I sold those for 50 cents. And you can see the closing price is 187.50 on the dot. So that worked out perfectly. And then I sold some 187 calls against those. Again, showing a small loser, but that's not reality. I'm going to get assigned these shares. And then I'm looking at a potential 58 cents of upside on Monday. If we do get assigned those shares, that would be perfect. And then I can look to re-enter on a put position. I think I've resolved myself to move into the wheel strategy more consistently. I'm just going to time my entries and play a little bit of defense with futures if we do get some pretty consistent moves down. So overall, these stock and option positions are going to be long, and then I'll play defense with futures and option positions if I need to. Let me know down in the comments what you thought of the PCE data or the Fed futures. Are we going to bounce off of these longer term trend lines, or are we just going to cut right through those and start making some new lower lows? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.